afternoon. Ira Epstein of Linn and Associates with your metals market wrap-up for this Tuesday, the 26th of May, 2020, and pretty soon we'll be saying June. It's about 5:35 in the afternoon, that's Central Time, and as you can see, down a bit in the metal markets. Stock market giving back some of the stellar gains that it made today. Foreign currencies had gone up so much, they're giving some of that back. So coming out of the gate today, after basically 3 days of being closed with the exception of light evening trade on Sunday and Monday morning, the markets just took off. And it's a combination of people going out all over the world. Schools are reopening in Europe, throughout the continent there, so that is phenomenal. Asia, it doesn't mean everything's fine. Everything's going to have restrictions. They're going to try to do their best with it all. We're even hearing that they're trying to do a hockey league game. All 24 teams going to be in, I guess, June into a playoffs of some type. So we're getting that semblance of trying to get back to normal. We're hearing from more medical companies that they seem to be doing, making headway in terms of getting into their Phase 1, Phase 2 parts of finding treatments and the vaccine. With all this money being thrown at it all over the world, you would assume that they'll get somewhere. But remember, the word cancer, there's still no cure, and there's a lot of companies that look for that. So I'm just pointing things out, and you've got to be realistic about it. Bonds and notes had sold off. They're getting a bounce in the energy markets, another up day. And, we keep getting up in the crude into this $34.50 mark, and it has problems there. And because at that number, you can see the producers want to turn back on the spigots and make some money. When we look at a weekly chart of gold closes, well, for the week now, we're down $31.20. So that started off pretty sharply lower down here. This is the support zone that I'd be looking at right through there to see how the market holds up. As you can see, we poked up here last week and couldn't get through anything of seriousness there. I doubt we're going to get through anything of real seriousness in terms of breaking these lows at this point, because while gold dropped today, why did it drop? Because the stock markets were so strong, with the exception of the NASDAQ and XLK, because the tech sector, which has been pulling this market upward for weeks on weeks end, well, that's stalling as other parts of the economy are now starting to jump up and carry other parts of the different sectors. If you get my Spider ETF video, I talk about it there. When we take a look at what the trend is in the market, it's down in gold for the short term. You have lower highs, you have lower lows. That's my definition of a downtrend. To negate it, you've got to take out 1742. That would be the number now that would negate this pattern of lower highs, lower lows. The market had gotten, and let's take a look at this as of where we were Friday. The market was fighting a battle, and it sliced through that support of the 18-day average today, and tonight it's even slicing through a bit. Where might the market be going? Well, if the market wants to rally, 1720.60 is the first resistance. Supports the lower Bollinger Band, and that might come in at the 1682.40 level should the market decide to reach down for that number. If you get a break in the stock market, I wouldn't think that the gold market's going to drop all that much, but the stock market hasn't been breaking. It just keeps going to the upside. When we look at momentum, it's down. So the trend is down. You've got lower highs. The bias is down as you're under the 18-day average of closes on a settlement basis, and even tonight, and momentum pointing down. Resistance, 1720.60, get over 1742, you negate the downtrend. I don't know how aggressive the bears want to be there. That's a $20 range. It's an awful lot of money to risk trying to defend a short or a long position, depending on, which way the market's going, but $20 is a lot. In the gold-silver ratio, we continue to drop back, so we now can look, and I've been saying this was your peak, 125, and you've already given back about a third of that peak. Okay, 25%, right in that range. In the silver market, backing off, but the chart's not as ugly as the gold chart. This market still has a fully embedded reading. Both numbers that make up the slow stochastic have been for days on end now, just staying over the 80 level, which tells me on pullbacks, the pros are still buying this market, seeing how far they can push it to the upside. Lose the embedded reading, and you put into play the possibility of getting back to the 100-day or the 18. But there's nothing bearish on this chart. Gold's already in the bear camp. This chart, at best, you'd be negating an uptrend, and that gets hurt if you get under 17.19, and that's still 34, 35 cents away. In the copper market, we have a pattern of a lower low and a higher high. There is no trend. You're just drifting right here. There's pretty formidable resistance from 246.05, the upper Bollinger Band, to 247.20, the 100-day average, and the 18-day average seems to be something of a support zone. Again, I don't see a trend that's developed here at all. In the platinum, this is still in an uptrend. There's a bit of divergence, and I'll show you, but you do have the pattern of higher lows. You certainly have the higher highs. You had 4 days in a row or so over that upper band, and then you came back down on a closing basis. Totally to be expected, but the market has found support against that 100-day average. So far, the divergence is coming in that momentum is still correcting to the downside. You never did embed. You were just overbought. Now you're correcting that. So it's a question of where does the support show itself. If the market takes out 846.90, you break the pattern of higher lows, higher highs, and could, with a close under 821.20, set up a bearish tone to the market. What I wouldn't like is if you're going to get bearish there under that, you do realize 911.90 is the last rally high. It's $90 away. When you're that far away on chart points, I consider them not valid. In the palladium market, we're backing off a little bit. You've still got to get under this previous low to do damage to the chart. That number was 1945.10, and right now you're just at 1960.30. Haven't taken that out. So just like in the platinum market, you've got the higher lows, higher highs. Unlike the platinum, your 100-day average and the upper Bollinger Band were right here, and the market couldn't get through them. Support's back at 1903.40. So I'm looking at these. What do you do with all this? Well, that's where the questions come in. And I know a lot of you don't trade on the futures, but you like trading GDX. You like GLD, SLV. I can go on and on. The list goes on with the gold miners and other parts of it. Well, I try to help you with that because a couple of months back, I started my Spider ETF video series, and it's exploded. I mean, we got a lot of subscribers to it. It's growing quite fast, and what people like is what it does. Now, I'm hoping one of the things you do is you tell people about these videos. They're the lead-in, without any question, to my Spider ETF videos, and I put those out intentionally in the afternoon. Like right now, it's about, 5:40 p.m., and the idea is you get for the night to see what's going on, and then if you have my morning video of my futures, you're looking to see what the futures do, because the futures are going to dictate, other than the spiders, what all these others are doing. It's pretty simple. It's not difficult. Many of these markets are based on what the futures do, and the sectors within the stock indices, well, those are called the spiders, basically. I'm giving you the broad outline of it. So by looking at the futures in the morning, I can tell you, hey, what I said last night, I liked still in the Spider ETFs, and where are you going and what are you doing? And I've added to this, so we're going to update this ad. I keep adding. I want to get up to about 35, 40 charts for you, covering those different spiders, but a lot more in the ETFs because they're so important and so many people follow them. How do you get this? Well, it's simple. You go to our website at www.iraepstein.com under the word research. You'll see the drop-down menu. You can read about the Futures Morning video and this one, the Spiders ETF video. Give it a try. It's that simple. Doesn't take a lot to get involved. You can see right here, if you click this, it'll take you there as well, that icon. I'm Ira. I'll see you tomorrow. You have a great evening.